Inflation is up, the market is down. What are you supposed to do? Check this video out. Hey guys, so the inflation report for August just came out. We had an inflation of 6.4%. This is something that, as you all know, I've been expecting already for quite some time, and I've been doing a lot of videos about inflation because of the train law. You all know already that it's been expected since last year that inflation would relatively be higher as compared to where we were before. Here's the thing though, the BSP, and similar to the other videos that I've created, the BSP projected that the range would be from 2% to an upper range of 4%. So from where it was projected to where we are right now, we are relatively not just in the higher end already, we've broken it over and over and over and over again. So why is this alarming, or why is this something that you should be concerned of to some effect? Please remember this. I like the country to progress, and if you've been following a lot of the videos that I've been making, I'm an optimist that I really like the best for our country. But here's the thing, we just have to also analyze the data as what it is. Inflation is up. It means that the cost of goods, the stuff that you would normally buy at a certain price, is now up 6.4%. What does that mean, and what's the implication of that? The higher inflation is, the more expensive it will be for a lot of people. Now, it may not be as hurtful to a lot of people with higher disposable income. It would not be as hurtful to a lot of people who have a lot of excess, or they know how to shift their budgets here and there. But to a lot of the people who are just barely making it each month, it will be a challenge, especially for some of the items that they've been buying, especially food, vegetables, and also I guess poultry and fish have gone up, stuff that people buy on a regular basis. So now let's try to break it down even further. I actually think that because of the flooding that happened over the past few weeks, you can actually expect this to be relatively higher. But the figure for the next few months, especially that the dollar is going higher, please remember this, the more imports we have and we're buying it at a higher price because the dollar against the peso is higher, it will cost importers to somehow, not to offset their costs, they have to bring prices higher. Bringing prices higher will make inflation higher again. So how does this impact also our GDP? For those who followed my video on the second quarter results of our GDP, something happened that consumption somehow dipped. Why did consumption dip? One reason is that costs are just relatively higher, meaning some people are trying to save money, skimp off on some things that they would normally spend off before. So now with higher inflation, factoring what's been happening in the third quarter, you might possibly expect inflation to be much the GDP for the third quarter to be much lower. A lot of people are projecting that we might drop to even below 6% already, and factor everything that's been happening not just in the country but outside also that's possibly affecting us. It's not too far off, and with that also puts expectations on the market, on the PSE as well. And you can also expect interest rates to go higher, meaning as a response of this high inflation, the BSP may increase interest rates. Them increasing interest rates would put somehow a reaction to the markets as well. But not just that, higher interest rates would be harder for people who want to take out loans for their houses, for their cars, or for entrepreneurs, because the cost of them expanding will be more expensive now. So it may have certain reactions to the economy as well. Now let's go to the markets. The thing about that is this: people are saying that the markets are down because of this. Please remember, that's one reason, but if you follow the videos that I created, there was a resistance at 7,900. A failure to break out from that resistance is a normal tendency for the market to actually retrace and go down. It's just that it's just more accelerated right now because there's negative sentiment in the market and in the economy. So the breakdown, the failure to break out from 7.9, I said that it could bring it to 7.7, but as of lunchtime today, we are now at the 7,500 level, which is another level of support. So breaking it down even further is this: 7.5. We failed to hold the 7.5 level. I think we have a chance to retrace and go back to 6.9, bar it gets protected by the 7.2 support. So please watch this and break this down. From 7.5 does not hold. You can possibly expect the market to go down to 7.2, but 7.2 is not as strong a support as the 6.9 level. So if this happens and 7.5 does not hold over the next few trading days, you can expect the market to retrace at a much lower point as well. So what do? At the end of the day, your plan in the stock market shouldn't change. Your plan for investing should not change. Stick to your charts. If some of the stocks that you're holding, those charts that you bought early on have now started to reverse down, meaning uptrends are now starting to reverse, supports are not holding, sell, take profits, stay in cash, and wait for another opportunity to make money. Second thing is this: if you just bought on some stocks that have started to reverse, if you just bought on some stocks that have started to bounce, but now because of the sudden selling that's been happening, those support lines are broken, sell. It might be at a loss, but better protect yourself, because our goal as traders and investors is not to guess what will happen in the markets. Our goal basically is to follow what the technicals are saying to us and then just come in and fight for another day. Now, if you're an investor, think about the companies that you own. Will they be affected pretty much over the long term because of what's happening? If they'll be affected, change valuations, you might also want to consider to sell. However, if valuations or the growth of the company will still be the same, exemplary companies that have amazing brand, amazing growth projections, that they're not just exposed in the Philippines, but they have areas where they can expand globally and earn globally, they might be more resilient than this. And this is where also I think defensive stocks will still do very, very well and earn more. The MPIs, the Meralcos, the Manila Waters, because of their nature that they can spit out money, people will still pay for their services no matter what happens. But should you be scared in all of this? Not really. Stay away from being emotional with your investments. Stay away from reacting without using logic and data. If 6.4% is something that's high for you, find a way, use it as a challenge to try to earn more, try to expand your cash base, and try to make your money work harder. Please remember this, the 6.4% is now something, it's a hurdle now that you need to beat. If your money is making less than that and everything is there, you're losing. That's why you need to find, I encourage you, people who will win are people who know how to be resilient in times like this. People who win will not just complain, but they will do their best in order for them to live their life at their own terms. Because at the end of the day, it's okay to worry about or look at the global economy, the local economy, but what you need to be concerned of the most is your personal economy. What you need to be concerned the most is how your cash flow, your income will be so good, that it becomes so good that no matter how high inflation is, it should not matter to you, because you're earning at such a large base and such a large margin above and beyond what inflation is hitting. So that's it for now. If you're new to this channel, please subscribe. If you're new to this Facebook page, please follow. We keep giving you info, data that will help you trade the markets with ease and confidence. So I'll be in Stock Smarts Manila this September 15. Those that want to learn more about fundamentals, I hope to see you there. And I hope this video helps you trade well, trade strong, trade smart. See you all again soon.